Let's discuss the Maruti story with Prayesh Jain, a research analyst at India Infoline. Prayesh, the yen has strengthened, 18-month highs coming in, and it's nearly strengthened by about 10%. How much of this would impact Maruti's earnings?
Definitely, Maruti has almost 20 to 22% kind of exposure to yen imports and royalty together. So it's a pretty high exposure, and this strengthening of yen will definitely impact margins. But on the other side, rupee is also depreciated against other currencies, and which it has exports. So that will have some offsetting impact. So in all, we expect further decline of around 50 basis point of impact on margins from here on. What we've already factored in to a certain extent in the previous quarterly estimates. So we believe that the margins could, which were in upwards of 16% in the past couple of quarters, can fall down to something like a 15% because of certain other factors like the adverse product mix, because of the new variants have lower margins, new models have lower margins. So 15% kind of EBITDA margins can be seen in the next couple of years.
Also, we've seen Quid or Tivago, which may impact the market share of Maruti. Do you think so?
The competition is definitely going to be very strong. Quite a few models are being launched, and but the thing is, even with Maruti, the products have been very good. But pie itself is going to grow because there's a lot of pent-up demand, and with generally, the passenger car demand grows at 1.7 times the GDP growth rate, and we expecting the GDP to grow at somewhere like 7.5%. Most estimates are in that range. So we're talking anywhere between 13 to 14% kind of industry demand growth in the next couple of years. And in that sense, I think so. Maruti has premiumized its product range now. With the kind of Brezza, the Ciaz. It's getting into the premium side as well, so that's creating a good mix. So I think that it should weather the storm of competition pretty well in the next couple of years. So it might lose market share here by some basis points, but it will still be market leader by far. And the kind of penetration it has across the country, I think something like a Renault will have tough time beating Maruti for that matter.
Also, Prayesh, there are production constraints for Maruti, along with high waiting periods for Baleno, as well as now Brezza, which has also been received well. Do you think volume growth is expected to remain in the 10 to 12% range over FY17, the current financial year?
Yeah, definitely. The capacity is a constraint in FY17, and the Gujarat plant, they're trying to push it earlier, but we don't know as to whether there are real any concrete thing that has happened that the plant might commence earlier. So definitely they'll be constrained to the capacity in FY17, and but there is no solution to that.
Okay, we'll leave it at that, Prayesh. Thank you so much for taking the time out and joining us and giving us that perspective. So that's the view from IIFL on Maruti specifically. One of the worst performing index stocks, next only to Adani Ports. That one is down 10%. Maruti too has fallen about 8%. Okay, what